Welcome to the Market Capitalist. I am Domenico Johnston. Thank you for tuning in. Today I'm going to be talking about short selling. Short selling may or may not be something you're familiar with as an investor, but in short, it is the position where an investor makes money when a stock price depreciates. Typically, if somebody says you're long in a stock, that means you're actually in a position where you've bought the stock. If it appreciates, you're going to make money. If it depreciates, you're going to lose money. Short selling is a little bit different in the way in which the transaction happens and the way in which you make money. As I said, you make money when a stock actually falls in value. Now, you never, as a short seller, when you sell short, you're actually having a third party, like for instance, I use Scottrade. If I was to enter into a short position, Scottrade would essentially hold the stock that I'm entering into the short position with. Let's use General Electric for an example. So I want to short General Electric. I sell short, and essentially Scottrade buys, holds the stock. I am in a position where as the stock decreases in price, my investment is worth more. As the stock increases in price, my investment is worth less. You have to have a margin account to do this because essentially you're kind of entering into a situation where Scottrade is borrowing something for you. They're the party that's holding it. Whatever brokerage account, it doesn't matter that you're using. So what ultimately happens is I buy that stock, General Electric, and profit from, say, I sold short at 8 and then it went to $5 per share. At $5 a share, I actually buy the stock and therefore $3 is my profit. The reason I bring this all up is because it's important for you, the investor, to know what's going on in terms of short selling, because that is one particular area of the market where people have their strategy and they implement it through short selling. But also, when you're going out and you're looking at particular stocks to buy, I think it's important to look at the number of shares that are actually held short in a stock. So what you can see is, for instance, Yahoo Finance does a very good job of this, and I think I'm going to put a screen capture below this video blog to show you this in the post on the page. What percentage of the actual outstanding shares are held as a short position? Some are going to be a greater amount, some are going to be a lesser amount. But it's very interesting, and one of the calculations that people use to kind of get a gauge on the percentage is the days that, based on the average volume of stock, which is how many shares are being traded per day, how many days it would take, based on the average volume, to work through all of the shares that are in a short position for the stock. And it can kind of get you, based on that, it gives you a better idea of the magnitude of the short position in a particular stock. Now, for a person like myself that goes long in stocks, why does this really matter to me? Well, one, it does give me a sense of the real people that are negative on the stock. How many people are really viewing this as a bad investment in terms of being long in the stock? But it also gives me an idea of what might happen if some good news comes out. For instance, if a company had, let's go back to General Electric. They have great earnings and their guidance is amazing. It's way above analyst expectations. So General Electric goes up in price. It was at 8, but now it's at 10. Well, the people that are short are going to think, uh-oh, I'm in a really bad position. I need to cover myself. So they're going to get out. They're going to essentially have to buy the General Electric stock to close out their position as a short sell. Now, what does that do? It places increased demand on the stock. And essentially, like we've talked about before, it's all supply and demand at work. Well, when you have a bunch of people that are short in stock suddenly having to cover themselves and having to buy the shares that they have been short in, they're putting another layer of demand on top of the already heavy demand because of the good news. So you may get a very significant run-up in the price of the stock because the short sellers are running out of the stock. It's actually called a short squeeze for the technically inclined out there. So that's something to be aware of. So if you know of a company that you feel very certain that is going to prosper in the future, that is holding or that has a significant amount of its shares in a short position, this might be an indication to you of an opportunity. And because of that, that may increase your likelihood or your desire to purchase that stock. Again, there is the flip side. There is a reason why all these people are short. And it may be because they think they can get a good trade on this or whatever the case may be, but the bottom line is they don't think the price is going to go up. They're betting against the price going up. Could they be wrong? Absolutely. But you have to take that into account. And to close this video segment, I will say that short selling has a much greater impact on the shares of particularly small cap companies, but those companies that aren't traded very heavily. So if you have a company that doesn't have that much volume, an increase in short positions can significantly throw that stock down. And throw it down, I mean price, because of the volume. If you have a ton of volume, there's going to be enough buyers out there to kind of balance things out. But typically, again, the short positions can really impact the thinly traded stocks. But going back to what I talked about when there's a short squeeze, when the shorts are covering, this can have the opposite effect when good news comes and essentially you have all the shorts covering and therefore pushing the price up significantly. Again, thank you for tuning in. I hope you found this educational. I know most of the people that visit the site are going long on stocks, but I think it's very important for you to know the other side of the coin and understand that when you're planning your strategy and making your actual investments. Thank you for tuning in. Comments are always welcome. Post them below. Thank you.